Hey everybody, I hope that you can hear me well. Hold on, let me adjust my headset a bit. Okay, I'm back. I hope that y'all can hear me well. I'm going to do a quick video because I keep seeing people say average down, average down, average down whenever you're losing on a trade. And I feel like that's partially sound advice. Everybody doesn't always have, unlimited capital. So you can't just average down completely on every single trade. You have to really believe in the trade to want to keep throwing good money at something that you're losing in. And so that's why it pays to trade small and trade frequently. So that's why I, utilize spreads in my trading. If I'm selling to open a trade, if I'm selling to open a trade, then I will sell one and I will buy one against it so that it's that trade. I'm essentially capping or limiting my risk. And I am also capping or limiting my reward in that process. But it tends to be pretty favorable because of the amount of ways that I can win when I am selling to open a trade. But even if I was buying to open a trade, I would still do the same thing. I would sell one against it. So I'm always trading in pairs at the very least. Now I do other strategies that utilize, maybe 4 or even odd number ratio type of trades, but I won't get into those complex trades here. What I really wanted to go over is that, okay, let's just choose a symbol here from these micros. Okay, let's just choose the micro E-mini NASDAQ futures. Okay, so the MN/MNQ, that stands for the micro E-mini NASDAQ. The Z is for December. The 1 is for 2021. Your broker may have 21 up there after that Z. So let's just choose this symbol. And it's up right now since the close yesterday. But as you know, let's say it started at about 15,200 and it went down as low as I want to say 14,800. It was about a 400-point move. But I'm rounding these numbers, guys. These aren't exact. You can go ahead and look at a chart and you'll be able to see exactly what those numbers are. So let's say you don't actually know just how far down it's going to go. You just know that the other week this NASDAQ was at 15,500 and you feel like it's a good deal. So you sell to open something. I'm just saying something like opening the first trade. You sell to open one trade. And I guess we can do something, some random number, something arbitrary. Let's just say we do something at the money. So we sell, and this will be a vertical put spread for credit. So we sell the 15,200 put and buy the 15,100 put. And let's say we give ourselves, let's just choose that December date. Let's choose that December date. So let's actually look at the options chain. That'll make it just a little bit simpler. Yeah, December 17th. It's 88 days. That's actually quite far. So let's click that. I said sell the 100, right? 15.1. Okay, so that is a 41.50 credit. Our max profit is $83. Our buying power effect is $104. The maximum we could lose is $117. Okay, so look, we're only affecting our buying power by $100 by putting this trade on $104. BPE, that's buying power effect. Now let's say you have $2,000 in your account. You got $2,000 in your account. At the very minimum, you can make about 19 trades. Okay. So let's say you don't believe that this downside pressure is going to last very long, right? So you can say that, okay, I'm willing to put up, I'm willing to get 10 of these trades. So I'm willing to affect my buying power by 1040 and that'll be 10 trades. Now, here's the deal. You have this amount, right? But As the stock continues to move downward, this is important, y'all. I don't always put on, like, to me, it's more dangerous to continue to put on or add to or continue to increase your quantity gradually. I mean, I know people who will put all of their quantity in all at once in one order and just let them all be filled. I don't do that. I always gradually scale in. And I'm going to tell you the reason why. You never know if that down move is done. It can continue to go down as much as possible. So look, while it's going down, so let's see, it started at 15.2, went to 14.8, and then went back up to about 15,000. So when it got to 15,150, you can add one. But it's not enough to add one. You add one that's a different set of strikes. So you choose different strikes that now have a higher probability or now have about the same amount of credit as your original trade. So if you affected your buying power by $104 on that original trade and your max profit is $83, then when the stock moves down 50 points, I don't add another to those same exact numbers. It's at 15.2 and 15.1. I'd go down to sell 15 even and buy 14.9. Now, I'm just showing you guys an example. These aren't exact numbers that I would choose. But each time I would do this incrementally based on if I know how much generally a ticker symbol moves, and I write it down each day before I get ready to trade in my notebook or on a sticky note. So if I have a few symbols that I'm going to be paying attention to because they look the most attractive to me as far as being able to sell some stuff to people. And this is the deal. The reason why I like the volatility spikes and selling into a volatility spike is because when that volatility does come down, because remember, fluctuations don't last forever. I've said this before. Heavy trading, heavy pressure, heavy fluctuations don't last forever. Eventually they mellow out because people, I mean, they may go find something somewhere else. You know, volatility is always moving. So because of that, I sell into that heavy volatility because the premium is that much higher. And so it's a volatility trade. I'm trying to benefit when the volatility leaves. I'm trying to sell while the volatility is high because guess what? You normally see these aggressive moves usually going which direction? Downside. Yeah, you're going to see some ticker symbols that'll have these crazy aggressive moves upward. But if we're talking about broad market, a lot of times you will see it going down. And like I said, it can go the opposite way. But that's something that you have to pay attention to. And you want to look at how much the puts are versus the calls. And if you just go to Thinkorswim, you can literally just see which ones are skewed higher. So it'll basically tell you in so many words, in so many ways, that the puts are more expensive relative to the calls, like 1-to-1 or same probability type ratio of being in the money, whatever you want to call it. Even delta, you could use delta to determine that as well. But mostly probabilities is what they assign. They're a little bit more accurate because they have a further decimal place. But anyway, I didn't make that video to talk about that. I'm getting a little bit long-winded, so I'm going to hurry up and do this. But basically, all I'm trying to say is as the stock continues to go down, if you have the capital to average down, I don't want to say I recommend, but I'll tell you what I do. I tend to allow the additions that I'm getting to be about equal to or better than the terms from the first one that I purchased. This one is essentially the Scout, and this one may get beat up quite a bit, at least initially. If I give myself enough time, I'm selling to open. I'm going to make money each day that it passes anyway, because I sold a coupon to somebody that is expiring. And because it's expiring, it's losing value each day. If it's losing value each day, then I'm making money because I could potentially buy it back for less than what I sold it for. That's the bottom line. But anyway, gradually, I don't want to say I recommend. I gradually scale into trades, and I gradually keep going further and further. This bad boy went to 14,800. And I saw it start to look like it was potentially consolidating. But really, I was just watching volatility, and I was watching to see if that volatility was going to subside. And this is the thing, I'm just guessing. I'm just guessing while I'm doing it. But during that time, as I'm guessing and incrementally, I am continuing to add to the trade, but I'm adding different strikes. I'm adding different strikes because these are getting similar financial terms as far as your buying power effect, your maximum profit, and your max loss, as this other trade that is getting demolished right now. So you may want to try it out one day instead of just adding to the same trade over and over and over again. You may find it beneficial to just put on a trade that has a better chance of survival. That has a better chance of survival, getting closer terms to the money if you're buying, I guess, or buying calls, or whatever your method of purchase or selling is. At the end of the day, there's so many ways to make money. That's why I absolutely love the market. But I'm just telling you guys, from my perspective, this has worked out extremely well. Whenever I have a bunch of contracts, and look, when I get to that point where I think it's over, that's when I may do multiple quantities at what I think is the bottom. And here's the thing, because I trade small and so frequently by using those vertical spreads, buying one and selling one at the same time, I'm always in a position where I have a ton of cash that's deployable. And because I have that ton of cash that's deployable at any time, I'm putting myself in a pretty good position if I am wrong. Okay, so always be mindful of that. Be aggressive and careful when it comes to scaling and averaging down. I don't recommend just putting all your money into the Scout, the one who's just going out right into the fire and just taking the beating. I don't recommend putting your money on the one that's taking the beating. That's really all I said, because at the end of the day, you don't want to finance other people's basically goals in this market, because there's always somebody on the other side of your trade. You want to make sure that you're looking out for you. Look out for you, put on attractive positions, gradually scale in. You may find that it'll help quite a bit versus just normally averaging down. It's the only reason I made this video. I might have done this a little bit today, and it turned out pretty well. Okay, so God bless. Sorry for making the video so long. I was hoping I was going to be quick and not long-winded, but God bless. Thank you for watching. Like, share, subscribe, send people to the channel if you want more content. Thanks, guys.